Welcome back. It hits differently with the headphones on, by the way. So super excited. Welcome back to Block Fuel Live. Co-host Jody, and we have the famous Adrian Morris as well. So we're gonna be talking about we're gonna be talking about the company formerly known as MicroStrategy, now just Strategy today. So Adrian, first and foremost, welcome to Block Fuel Live.
Thank you for having me here. My second time on with Jody, my first time on with you. I'm very, very excited for this conversation because, I love things strategy. It's a very, very interesting investment opportunity. So talking about it whenever I can to enlighten people is always an opportunity I take.
Yeah, certainly.
And Adrian, you're part of the Master True North crew, the irresponsibly long MicroStrategy group or MSTR group on Twitter. So this is, I think, it appears very similar to the GameStop crowd, but has more GameStop crowd in 2020, but has more this fervor and I think long-term view of Bitcoin as a reserve asset, Bitcoin as a store of value, and then these very, very interesting products built on top of it. So I think today was the easiest one, easiest show we've had to prepare for, because we're look, let's just let this man Adrian cook. He's got a lot to say on both strategy, on the underlying, but also on these really interesting pieces of, what is the preferred equity offering, what are these ETFs that are tied to it from the yield perspective. And we're not gonna be able to dive super deep into each one of these, but I think our audience would definitely love just to see hey, what do you think strategy is now? A little bit of the tariff effects, set the stage, and then kind of dive a little bit deeper, peel back the onion and say, hey, here's what the different equity offerings, the strategy economy that's unfolding looks like.
Sure. So where to start? I'll skip over going through my strategy journey because I've done that so many other times and just get right to the meat and potatoes. So what strategy is doing, in my opinion, just like you mentioned, and we discussed briefly over the last couple of weeks, is that they're building, in my opinion, an economy of scale around Bitcoin, right? A lot of people think that the end game is to become a bank, right? That's one of the more popular talking points. That is definitely, I think, one of the end games, and I definitely think that is in the offing. But near term, what I think strategy is doing is they're creating an economy around Bitcoin. And let's really talk through what that means conceptually. If you look at Bitcoin in and of itself, one of the things that Bitcoin has been called is digital gold. It's been called a more perfect money. It's been called a pristine asset. And one of the common talking points about Bitcoin, one of the ways it can scale, one of the ways that it can be leveraged is as a base layer for a new economy, right? And money can be issued against it. Money can exist on top of it. We have the layer twos, Lightning, Liquid, so on and so forth. All of that plays into Bitcoin, with Bitcoin being that base layer. So if we take that concept and we move it over to TradFi, in my opinion, what I think strategy is doing is that they're making Bitcoin the base layer for a new traditional financial system. As such, it makes sense for them to issue and use equities on top of Bitcoin in that kind of a fashion. And that is where that layer one, that first primary rung of that economy exists in strategy, in MSTR. They're using Bitcoin to increase the volatility on the stock. And that increased volatility in the stock tends to outperform Bitcoin. And as a result, that increased volatility on the stock over time increases the stock price. And when the stock price increases, of course, that gives you more shareholder value, right? That's a very, very basic understanding, first layer understanding of what strategy is doing. Now, on top of that, this is where things get fleshed out. Because strategy is an equity, because it's a stock, they have certain things that they can leverage to leverage Bitcoin in a way that most people perhaps are not familiar with or comfortable with. Now let's talk through a few of those things. So because they are stock, they have a few rungs that they can pull. They have ATM equity offerings that allows them to issue shares at the market in a way that is designed to be relatively market neutral to buy more Bitcoin. They buy more Bitcoin, that increases the amount of Bitcoin on the balance sheet. So that initial dilutive effect on the shareholder in terms of issuing new shares, they call it accretive dilution, becomes accretive because more Bitcoin is existing on the balance sheet, which is eventually going to drive the stock price up. They can then do convertible notes, where they are essentially saying, they're going to borrow money at current date and pay it back at a future date in shares, which allows them to accrete more Bitcoin onto the balance sheet. And just like in the first example, it leads to shareholder value, it leads to accretion of the Bitcoin, it accretes the Bitcoin per share, and it accretes the stock price. And those convertible notes are often at 0% interest. There's varying interest rates between some of the other offerings that they have, but that is the gist of it at a very, very high level. And now, on top of ATM equity, on top of convertible notes, we now have STRIKE and we have STRIFE, which are different kinds of dividend plays. So STRIKE provides you with an 8% dividend that is convertible to strategy shares. I'm giving you a very, very dumbed down, simplified version here. STRIKE allows you to convert to strategy shares. It gives you the 8% dividend, and you would open up a position in STRIKE if you are essentially long-term bullish on the stock, but also want that 8% dividend. STRIFE, on the other hand, operates more like a bond. It is not convertible to strategy shares. It gives you a higher percentage yield in the form of 10%. And that is a play where you're not necessarily interested in the exposure to strategy in the sense that you can convert over into strategy shares, but you do want that dividend, and that's how it exists kind of like as a bond. So that right there by itself, that's just strategy.
Yeah.
Now, on top of that,
and before we get in there,
yeah.
I mean, this a great way to set the stage is, we've seen, like Saylor was talking this week of like, why versus holding Bitcoin directly. I forgot what interview it was. And he's like, look, like, how many people can go out and borrow $4.5 billion, with, minimal recourse, very low interest, and go buy Bitcoin with it. Like it's just, that's not available unless you're a corporation. And then you captured exactly where the value is on the volatility, the entire derivatives market. And so much of the value is just driven by the volatility of the options themselves and capturing some of that trading, just volume that's coming in and out, and the interest that's driven to MicroStrategy makes the options super volatile, as well as like being able to capture that like upside of like what people expect that growth to be. I guess, yeah. So with that, I guess, would you agree if just like, hey, like, or would you phrase it differently of like versus holding just Bitcoin itself? Here's, a few ways you would think about why you would hold strategy.
Well, I was about to get into the options market, so you hit on it perfectly, right? So we have ATM equity, we have the convertible notes, and now we also have STRIKE, we have STRIFE, but underneath all of that, we still have the options market that has a obscene amount of open interest at any given time. Anywhere between 60 to 110 million shares can be locked up in the open interest, right? So that by itself is also another powerful market that gives you additional volatility on top of the volatility. Now, to touch on what Saylor said, why not just buy Bitcoin? Why would you even want to own strategy? It is not, in my mind, an either or. If you are a person that is comfortable holding Bitcoin in and of itself, please do that. That is a perfectly sound investment thesis. It has worked for the last 15 years, and in all likelihood, it's going to work for the next 15, right? But the reason why I want to say it's not an either or is because strategy is a different vehicle altogether that exists on top of Bitcoin. And just as I illustrated in the first points that I made, you don't invest in strategy thinking this is an either or, at least in my opinion. You invest in strategy to get that additional optionality on top of Bitcoin. So you'll get price appreciation. You would get exposure to Bitcoin passively because, by owning strategy, you do not have any claim to the underlying Bitcoin that the company holds. And you're doing it as a way to get additional price appreciation on top of the volatility that Bitcoin would see. That is a very, very simplistic option that you would say to yourself, why would I invest in strategy versus investing in Bitcoin? Now, that said, because strategy is an equity, because it has a derivatives market around it, you have a few options that, no pun intended, that you don't have with Bitcoin. So much in the case with IBIT has an options market, right? Yeah. But that's pretty much it. And they do have some other derivatives. But because of strategy being a equity, and because it's a corporation, just as I laid out, you have STRIKE, you have STRIFE, you have the options market. Those are three rungs that exist on top of strategy that do not exist for Bitcoin in the same fashion, unless you want to count the 2x Bitcoin ETFs and whatnot. But they don't operate much in the same way. They don't offer the same kind of exposure in my opinion, and the same kind of opportunities, in my opinion, that strategy would offer. So the notion that there's a either or one is better than the other, I think kind of loses the plot. Realistically, what we are looking for collectively is the best opportunity to accrete value for ourselves, and strategy is just another way you can do it.
I got a question. So, like anyone that's been following Bitcoin, one of the most volatile assets, I think we've talked about multiple times, right? The ETFs kind of gave it some sort of psychological floor in a sense, right? It does feel different than it did 10 years ago, for example. And then if you look at MicroStrategy, MSTR, if you zoom out way far, obviously a completely different company 10 years ago, but it made that similar move up, came crashing down, was flat until they started buying Bitcoin again. What I guess for the naysayers out there, there's with anything like this, there's going to be people that see the other side. So I'd love for you to kind of defend, or for anyone that is thinking like, hey, this could just happen again. Bitcoin's going to crash to 20,000. Saylor's going to get screwed out of all of his money. Then what happens if Bitcoin does? What is that number that it has to hit essentially for Saylor to get liquidated ultimately?
Well, he can't get liquidated. The Bitcoin is unencumbered. It's unencumbered debt. So without getting into the deep details of what that means, what that essentially means is the structure of his debt offerings, which he used to buy the Bitcoin, they do not have a call option on them. So he cannot be liquidated. So that is that's a talking point that we've been hearing for years now that just does not go away. So for anyone watching this, Saylor is not going to get liquidated. Okay. So that's the first piece of the puzzle there.
Take away.
Yes,
That's why it is the question update.
Yeah, it is not the same as the three of us existing in the market playing leverage games on Bitcoin and getting liquidated. That is not how this that is not how this works. If you think it through, what he is doing is he is issuing shares, right? And this is one of the talking points that we touched on True North last night, actually. One of the things about the strategic Bitcoin reserve is that people are saying, why doesn't the US government just print money and buy Bitcoin, right? The price will go to the moon. Okay, fine. So what do you think Saylor's doing? He's printing shares to buy Bitcoin. That's essentially what he's doing, right? So with that thought process, with that framework, think of it this way. Where does the call option come in? When he has issued shares at the market in the form of the ATM equity offering, he has bought that Bitcoin in cash, and he has then acquired the Bitcoin, right? Or if we look at the convertible notes, he is offering to pay off the debt at a later date for the cash today, often at 0% interest, billions and billions of dollars.
Crazy.
He is then using it to buy Bitcoin to put it onto the balance sheet. Now, what if the stock price is not at a certain level by a certain date? Well, the price is set in the convertible note, so therefore he is going to issue the shares at that price at the time the convertible note comes due. The whole notion of this is we're betting on Bitcoin going up, right? So if people want to have some kind of a criticism and say, well, what if Bitcoin doesn't go up? Well, then he would have to adjust. But that adjustment does not mean that they're going to be liquidating their assets. If you think of it, they can use some of the same methods that they're using right now to cover debts. They can issue shares at the market. They've already issued billions of dollars that have been absorbed rather nicely by the market, have they not? So why would that instance not hold value into the future? A lot of these talking points about Saylor getting liquidated are, one, misinformed, and two, in my mind, much to do about nothing. Because if you look at the cost basis of Saylor buying Bitcoin, yes, the cost basis is going up, but it's going up because the price of Bitcoin is going up. So far, the thesis is playing out, right? So I don't think there's any real risk of Saylor being liquidated or hitting a number, quote unquote, where he's going to be forced to sell. Did that address the question efficiently?
Yeah. And I have heard you talk about this in the past. I just thought this new audience, they definitely want to understand that a little bit more.
And you mentioned around like issuing shares. So could you walk us through, what Saylor is thinking with financial engineering as he's like, hey, coming in 2025, I want to offer, STRIKE or STRIFE, these new products to access capital in ways that isn't the standard, issuing more shares of strategy.
So and that's why I like to use the economy example. If you think of it, you have strategy dead center, right? And strategy is the center of this economy. He has the traditional ATM equity issuance that he can do on strategy. He has the traditional ATM issuance he can do the traditional convertible note issuance he can do on top of strategy. All he's done is he's created new vehicles to do the same thing. Is the simplest way to think of it. He's created new levers that he can pull in this economy, in this ecosystem that he's created, where he has different options to issue more shares or convertible notes in order to accrete more Bitcoin. Now, granted, in my opinion, until like the market for STRIFE and STRIKE scale up, he's going to be nowhere near as aggressive with ATM on those two instruments as he is with the common stock, right? It just wouldn't make sense. The volume isn't there. So, but what he is doing is he is looking forward and he is thinking and this is again my opinion, if this is truly an economy of scale that he is building out, thinking forward 2, 4, 6, 8, 10 years, take a look at where strategy was in August of 2020. If you had told me that they would have MSTU, MSTX, MSTY, STRIKE, STRIFE, IMIST, options markets that rivaled NVIDIA in terms of open interest at times. You have OwnB from Bitwise as well on top of IMIST. You have BMAX from Rex Capital, or is it Rex Financial, that is giving direct exposure to the convertible notes via an ETF. I would have told you that seems kind of aggressive, but here we are.
Yeah.
So he is front running that need. On the STRIFE side, I think he is thinking more in terms of capturing the bonds market, because of the way that the instrument works. On the STRIFE side, on a STRIKE side, it's very easy to mix these two up with the naming.
Yeah.
He is thinking in terms of capturing the individuals that are looking for a true fixed income instrument that would also give them the optionality to convert into MicroStrategy, into strategy shares. So these are all different levers that he is creating in the system. And it is very much an economy, because if you take a look at an economy of scale, you have different players in the market that are coming in for very, very different reasons, right? However, that to me is fundamentally different from your typical stock equity offering. So if you take a look at the market, how many equities, how many companies really have a structure like strategy right now? You have some that have happened after the fact when the interest has peaked. So like with Tesla, with NVIDIA, with Apple, with so on and so forth, the Mag 7 stocks, they have 2x levered plays, sure. But they don't have a methodology, a strategy, again, no pun intended, where they are issuing shares to the market to accrete a pristine asset that is only going to drive up the share price of the stock, and so on and so forth. It is just a continuous series of flywheels that he's creating to feed this economy of scale. And the whole idea is that Bitcoin is an underlying asset. That's a fundamentally different use case and a fundamentally different offering that exists in anywhere in the stock market right now. And we've seen that others are trying to adopt it, right? You have Similar Scientific, you have GME, so on and so forth. So I think that the market is seeing that this kind of a structure has merit. And I expect in the coming years that these kinds of offerings will exist on the other leveraged Bitcoin equities, and the market itself is going to scale significantly.
Yeah, when I saw Saylor speak, I had the opportunity to talk with him down in Miami. And the one thing that just stuck out to me when he was talking about with Microsoft when he went there, he's like, all these guys with cash on their balance sheets, with inflation, they're losing money just having it sit there, right? And where they're buying Bitcoin, it's ideally not doing that. In terms of some of the outflows, you mentioned all these different products, right? When he launched like STRIFE and STRIKE, was there money flowing out of MicroStrategy MSTR into these other products, do you think? Or you mentioned that it's more so different people that are more interested in bonds, for example, or did you witness like a big outflow initially?
So when you say outflow, are you talking about people selling MicroStrategy shares to buy STRIKE or STRIFE?
Yeah, because I've heard people go back and forth. I'd say like me and Jody had this conversation around like MSTR or like MISTY sounds kind of interesting, right? It was MSTY, where it's more of like an income producing. So I think other people that are listening to this are probably having that conversation internally as well of like, hey, do I want to have the upside of MSTR versus something that's income producing, like MSTY. So I was just curious if you noticed if there was outflow of like folks that had MSTR ultimately being like, hey, I'd actually love to be like these guys on Twitter that are showing these screenshots of $16,000 months of just income just by passively holding that.
So, and we can talk about that. The first bit of advice I would give is, and this is just my personal opinion, be leery of anyone sharing trades online.
Right.
Always.
And
Screenshots,
there are
photoshopped.
yeah, well, there are some people that are doing it that are legit, right? They're showing you real
Mm.
time. They're sharing their screen. They're showing you actual trades that they're executing. I'm not talking about those. If someone's sharing a screenshot, let's not make decisions based on that. Is the best advice I would give
I agree.
for first and foremost. That being said, this comes back to my earlier point of this not being an either or proposition.
Mm.
If you want an income generating play like Misty or Strike or Strife, those are three different income plays. Misty is playing the options market to generate yield for you. Strife is providing a dividend in the form of an 8% yield and also giving you Strike is providing a dividend and also giving you the opportunity to convert to MicroStrategy shares and giving you that 8% yield. Strife is operating more like a bond because you don't have the convertibility and it's paid out in cash, so on and so forth. So that's the first thing you need to understand if you're going to be looking at these things. And now I suppose I have to throw an IMIST into that as well by Bitwise. Because we just had Jeff Park on last week on True North, and he was talking about this potential.
Listen to the whole thing. Yeah, it's good.
Yeah. So they have a different option strategy to Misty, right? They're looking at playing the options market on more longer term and longer dated calls, while Misty is being more aggressive and they're probably doing things that are more near term, 1 week, 2 weeks, so on and so forth. And therefore, the yields are going to be different, the opportunity costs are going to be different, so on and so forth. So before anyone considers going from MSTR to any one of these other opportunities, they would have to consider that. Now, have I seen people talking about, oh, I sold my MSTR for X, Y, or Z? Yes, I have. Do I think that is in a significant volume? No. I think that there's a very passionate group of individuals that believe that the capped upside potential, getting into something like Misty or Strike or so on and so forth, or IMIST, is worth it because it's generating income, right? And for their particular investing thesis, that makes sense to them. They're willing to sacrifice that upside for that continuous payout, for that continuous income generating opportunity. And this is why I say, don't see it as an either or. If you have the opportunity to generate income from a dividend payment, you should be seeing it in and of itself. You should assess the opportunity costs, and if you are comfortable with that opportunity costs, this is now an income generating play. So if you have $1 million, and I'm not saying that, that's normal, but let's say someone has $1 million, right? And they have $600,000 in Bitcoin. They have $200,000 in strategy, and they have $100,000 in Misty or IMIST. And that $100,000 is giving them what? $7,000 a month in perpetuity?
Yeah.
Is that a bad idea? No.
Yeah.
That's great.
Right. So, and also the other thing that people need to understand is if you are going into these plays like a dividend play, right? Like Misty or IMIST, you're getting into those because you are perhaps not comfortable with the notion of playing the options market by yourself, going through the growing pains, because, as we say in the True North group, tuition for this school is expensive, right? You learn a lot of expensive lessons along the way. If you do not have the stomach capacity or aptitude to handle those losses, there's no shame in getting into a dividend play like a Misty or an IMIST, right? There really isn't. And you're essentially outsourcing that responsibility, outsourcing that need to play the options market to a Bitwise or to a YieldMax to do it for you, trusting that you're going to get the yield, right? Now, there's opportunity cost with everything. But you should be thinking about it in terms of this $100,000 here is losing me this upside potential on strategy. I don't think so. I don't think that's the right mentality to go into it, because if you get into this either or mindset, your emotions are going to mess with you. You're going to constantly be going from one foot to the next, thinking to yourself, yeah, I'm getting this dividend, but oh, MicroStrategy is up 40%. Should I sell? And then strategy goes down 25%.
Just constantly chasing, perpetually. Yeah.
Exactly. You need to have a set plan and stick to it. You need to learn how to just walk away. And so to the very long-winded answer that I'm giving you is, yes, I've seen that, but I want to make sure that people have the right understanding of what that means. And also, I haven't been seeing people in mass selling off their strategy shares for MSTY, or perhaps even discussing to do it to IMIST. I've seen people comparing MSTY and IMIST and the pluses and minuses between the two, but I have not seen, I personally have not seen the talk of a lot of outflows, or seen a lot of outflows from strategy into these other offerings.
Super helpful.
Yeah. And Adrian, I think going back to something we hinted on earlier, we got a tweet for you, and we want to dive into it.
We need some theme song for defend your tweet, though, Joe.
Yeah, we need to defend your tweet theme song.
This is a defend your tweet moment where each of the guests, we're gonna start doing this every week, where we scroll through their Twitter, try to find something. They put it out there publicly, so we have to dig in and make people defend their tweet. So
yeah,
go ahead, Jets.
This is from today. So the MicroStrategy ATM noise is building again. And Adrian, I want to set the stage for this a little bit. Could you talk about maybe some of the pushback against the ATM, the dilution fears, that we were talking about before we started recording or went live, that you've seen start even in like December?
Well, before that.
Even before that, yeah.
Before that. So how do I start on this? So the general talking point, the general point of contention is that when Saylor, and here's the thing, Saylor isn't hitting the ATM. I hate it when people say that. It is so aggravating. The ATM equity offering is done algorithmically via either a TWAP or a VWAP. That's a time-weighted average price algorithm or a volume-weighted average price algorithm. We don't need to get into what all that means necessarily, but and it's also done third-party. Okay, so that means that it's not Saylor's minions at strategy making trades and dumping shares onto the market. Okay, so what's happening is that these algorithms are designed to put shares into the market in ways that go with either a time advantageous model or a volume advantageous model, so that the issuance of these shares is essentially net neutral. Okay, it's going with the volume, it's going with the trading activity. It's a very, very simple way to think of it. Now, the talking point is when Saylor hits the ATM, he's slamming the price. Okay, so let's talk that through. Is the ATM in and of itself suppressing the price? A lot of talking points come back to the fact that a lot of activity happens at the margin. So what that means is a very, very small volume of shares going plus, in other words, being bullish, or being bearish, in other words, selling, can be directionally important and directionally powerful in the price. Okay, in theory, sure, that is possible. And in the most recent quarterly call, they had a slide that said that the ATM issuance was 2.9% of overall trading volume, right? But people were still hammering the point that 2.9% is significant at the margin. It can drive the price. Okay, sure, it can. My immediate counterpoint that no one in the last 8 months has been able to actually address is, okay, 3% at the margin is very, very powerful and potentially directionally important. What about the other 97%? What about the other 97% of trading volume are you not addressing in your thesis, right? The impetus, I believe, is that when you see the price going down, or when you see the price leveling out, and Saylor has been issuing ATM equity offerings weekly, right? For a while, he was doing it every single week, very, very aggressively.
Yeah.
It is very easy to make a correlative link between that price activity and then, in my opinion, have confirmation bias with any other data points you see along the time that confirm that. However, if you're making the claim that 3% of trading volume is directionally important to the price and is pushing the price down, what about the other 97%? And let's talk that through. And this is what I mean by the noise is building again. I'm hearing more and more people talking about prices are moving, he's hitting the ATM again, is he going to start being aggressive, so on and so on and so forth. In the model I just gave you of this being an economy, if we think about what that other 97% entails, here are some of those quick bullet points. We have options activity on MSTU. We have options activity on MSTX. We have options activity on MSTY. We now have options activity that are going to exist because of IMIST and how they're playing the market, okay? We also have options activity on Bitcoin. We have the leverage plays on Bitcoin. We have the Bitcoin price activity in and of itself, where strategy is showing between a 70 to 85% correlation with at any given time. We also have larger liquidity factors to take into account, in the sense that global liquidity was clearly drying up in Q4 into Q1 2025. Now, I thought we would turn the corner. I was initially still very, very bullish for 2025, but it turns out I was wrong to be, because for many reasons, no one saw this tariff situation coming.
Kind of blew up a little bit bigger than we thought.
Yeah. We people thought that there would be additional tariffs. Sure. We didn't think that tariffs would go into the 50, 60 to sometimes 100%.
245% for China.
Yeah.
Right?
Well, now it's 200 and whatever percent. It went up again. So, right, that clearly threw the thesis off a little bit. So the reason why I say that the noise is building again, and I say it so exasperatedly, is because the same talking points are coming up without any nuance. All the things I just mentioned to you, in my mind, are more directionally important than the ATM issuance. And none of them are being talked about. Strategy by design is going to be affected by Bitcoin with second and third order effects. Strategy by design is going to be impacted by the options market, by the dividend plays, by second and third order effects. No one is talking about the first, second, and third order effects of all of those other potential impacts of the price, but they're just focusing on the ATM. In my opinion, this is a very, very simplistic, it's very, very reductive, and it's very, very reactionary. And I understand the motivation to do it. But however, when you're in a trade, it is, or well, rather, let me be more specific here. If you think of this as a trade and you don't have a longer term view on it, it is best to go into it with eyes open. You need to understand all of those other additional effects. If you're someone like myself who doesn't see this as a trade, even though I do play the options market, I'm not doing that with my entire stack. I'm doing that with a small percentage of my overall shares, right? Because I personally am comfortable with the risk of playing the options market myself, and I don't want to be in something like MSTY or IMIST. That is not because they're bad products. That is because, for me personally, I am comfortable taking on that risk myself, and I don't need to outsource it. So all of these things play into strategy. And now we have it even more so because we have STRIKE, we have STRIFE, we have IMIST, we have BMAX, we have all of these additional options, sorry, not options, all of these additional levers that exist in this economy that exist on top of strategy, which by itself exists on top of Bitcoin. So you have first, second, and third order effects with everything to consider. And you're telling me that 3% of trading volume at the margin is the very, very thing that's driving the price down. I call shenanigans on that whole thesis. And I think that someone needs to really dig into it if that's the claim that they're making.
Can you double click real quick on that last little piece? So the STRIKE and STRIFE, right? So those are all part of strategy as the company, correct? They're different ticker symbols. But you're saying because people are the inflows are coming into those other products as well, MSTR, does MSTR, maybe I misheard you, but does they then benefit as well based off these other second, third orders you're saying?
They can. It's the thing is, it's very, very difficult to say directionally which way it would play. For instance, and let's just talk it through. Strategy by itself, it goes up in price, right? What are going to happen to STRIKE and STRIFE? They're going to go up in price, right? However, very, very simply, if we just take this analysis and flip it the other way, if STRIKE and STRIFE go down in price, does that mean that strategy is going down in price? Not necessarily. They can be going down in price for all kinds of different reasons. They can be going up in price for a whole slew of different reasons. Why is that? Because you have a different investor base that's going into STRIKE and STRIFE.
Yeah. Okay.
So while the relationship can be bidirectional, it is not always bidirectional. And that is something that people have difficulty understanding. Now, if we look at a different offering, if we look at something like MSTU and MSTX, they're playing the options market. They're doing a variety of different things to generate that 2x yield on top of strategy, right? Now, that is a more straight directional relationship in the sense that when strategy goes up, in theory, they're supposed to go up 2x. But what I tell people with those plays is those are targeted 2x ETFs. Those are not guaranteed 2x ETFs.
Yeah.
And things like, there's so many things that can go wrong with those, and we can have a whole different live stream on that topic.
Yeah.
But there's you can have volatility decay. You can have slippage in those plays that then do not give you the 2x, right? And then you have a situation where they're having to buy or sell. There's all kinds of things that can go on. So all of these are second and third order effects. And if we just think about it, you have Bitcoin as a base layer. Bitcoin is going to be a first order effect on MicroStrategy stock, right? On strategy stock. Second order effects on strategy stock are going to be your general trading activity, right? On strategy in and of itself. People playing the volatility game, people playing the options market, people going in and out of strategy trades for whatever reasons. Second order effect. Third order effect. You have STRIKE, you have STRIFE, you have MSTU, you have MSTX. Those are my minor third order effects because they exist on top of the volatility that is already given by strategy, and they exist on top of the options market. So that's going to be a third order effect. Now you can even say there's a fourth order effect with regards to all the ETFs that are now going to be holding strategy, right? There's so many different levels to this play that reducing it all down to 3% of trading activity, I think is missing the whole picture. So I think it does a disservice to have such a reductive view on things, and I think it adds to investor stress. And I really think that the conversation needs to be fleshed out just a little bit more.
Yeah, and to see some of your responses to that tweet and kind of rebuttals, I think it goes along with what I think is like full disclosure, like hold strategy, the MSTR stock directly, hold a little bit of IMST now, very small amount, just to like dabble in it. But for strategy itself, I do see, if you see the long-term vision, if you're a long-term holder and he's trying to become a bank and he sees potentially like, hey, how do I get to where I have like critical mass? You want to be acquiring under 100,000. Like you don't want to be acquiring and like diluting later when it's 150,000, 250,000. It totally makes sense for him to
then,
yeah, it totally makes sense for him to be like, oh, I'm going to dilute strategy pretty like far right now. Like, and like we just discussed, like it's more algorithmic decision making, but to have that dilution happen now is better when you have Bitcoin not being fully adopted by nation states and not having strategic reserves in place and not having like full like retail adoption of Bitcoin as a payment or Bitcoin as the store of value. So I think people like you kind of mentioned around like short-term versus long-term investors is the big difference.
Well, you actually hit one of the primary points right on the head, right? I think people, by and large, when they go into an investment, regardless of what it is, I think most people don't understand what they're investing in. And the reason why I'm saying that in the case of strategy is this. Saylor has been very transparent about what the plan is. Acquire more Bitcoin to accrete shareholder value and company value, not accrete company value to acquire more Bitcoin. Okay, now that's a very, very important distinction. And to your point, he is front running everything right now. That is why he has been so aggressive. It's because in order to acquire the most Bitcoin as possible, to reach that critical mass that you discussed, he has to be aggressive early. He does not want to be aggressive when Bitcoin is 150, 250, 350, $500,000 a coin. He wants to be in position by then to have a moat that is so unbelievably large. The strategy economy is the center point of Bitcoin in TradFi. I think that's what the end goal is. It's not just being a bank. It's not just acquiring Bitcoin. It is getting to such a size that when Bitcoin scales, it becomes systemically important in traditional finance because there's so many different players playing it. He's issuing shares, he's issuing convertible debt, he's doing whatever he can via as many levers as he can to get as much Bitcoin as he can. And I think that's what's getting lost in translation with the ATM price. And in my view, with the ATM price, with the ATM equity offerings and its potential effects on price, that model he is following requires being aggressive on the ATM. So in my mind, I ask people, are you really sure you understand what the long-term investment thesis is? Saylor is playing the long game. He is not necessarily focused on quarter to quarter, year to year right now. Right now, his focus is on acquiring as much Bitcoin as possible via as many different levers as possible. And that's why I say it's an economy. You have, if we scale this thing out, we've got what, almost a dozen different things that are existing
Yeah.
on top of strategy that is now existing on top of Bitcoin. That doesn't seem like a stock to me. That seems like its own market. That seems like its own ecosystem. That seems like its own economy. That is what he is doing. So I am not trying to minimize the feelings that people have around the ATM equity offering. What I'm trying to say is, and this is where I'm going to sound harsh, they are feelings. You
Yeah.
can feel however you want about the ATM equity offering. The decision is, do you stay in the trade or not? And if you choose to stay in the trade, if you are a trader, or if you choose to stay in the investment, if you're like myself, are you doing this with your eyes wide open? And are you doing this from as an informed base as possible? That is the question I think many people in the community need to ask themselves.
Yeah. Well, I think part of it is you being so informed, right? That was going to be one of my questions: is how do I become the next Adrian, or like people that are listening, like where do you go to? Are you talking, you're reading through the quarterly earnings reports? Are you, reading up on every single article that comes out, talking to Saylor
Yes.
directly? So and are you? I'm assuming you have other stocks too, but you've kind of put yourself on this brand with strategy now. Like how much time of your day are you focused on strategy versus looking at the rest of your portfolio?
Well, the thing with it is that I am spending less time focused on strategy in terms of an investment. I'm fairly confident in my investment thesis at this point. Right now, my focus is staying abreast of new developments, making sure that I don't just rest on my laurels, that I'm testing my thesis, and making sure that I'm staying informed, right? So when the new offerings come out, things of that nature. But to answer your question more directly, the True North crew, we have Ben Workman, we have Jeff Walton, we have myself, we have Dan Hillary. We have several other members, well, a few other members in the MSTR True North group. That is because they have been the ones that have been either the most visible, the most vocal, or the most informed on strategy for like a good year and a half, if not longer, right? That's how the group came together. And before recent developments, so if I can give a more concrete example about the amount of time this has taken, strategy.com, the website that they launched that have all the metrics, before that launch, people like myself and Ben Workman were doing the NAV calculations manually. We were looking at the 8Ks, we were taking the share count, we were doing the calculations, and we were providing the trending analysis on the NAV. We were doing it on a diluted and fully diluted basis. We were breaking it down in very, very different ways. That only comes through reading through the 8Ks, understanding where you need to look, and understanding the 10Ks, the 10Qs, and so on and so on and so forth, right? Staying abreast of the debt ratio, staying abreast of the leverage ratio. That's something that Punter Jeff is really, really in tune with, right? He has a master spreadsheet that he's been tracking now for over a year and a half with all these metrics with regards to strategy. That's what it takes. That's what it takes. There's no shortcut. Just like with Bitcoin, to understand Bitcoin, that took years, that took hundreds and thousands of hours of reading, that took going down into a rabbit hole, that took reading people like Lynn Alden and some of her early posts, and reading Broken Money, and then reading Safety Moose, and reading all of these different individuals. Max Kaiser years back when he was one of the newer ones, right? Because he's an OG, and so on and so on and so forth. It takes a collection of knowledge from a variety of sources. The same is true for strategy. The only difference is that strategy requires an understanding and appreciation of traditional capital markets and traditional finance, and that's where the disconnect comes. Now, I was a financial analyst years back in my early career, so it was, I'm not going to say easier, but it was a more natural transition for me to take off my Bitcoiner hat for a moment and put on my financial analyst hat again and have that kind of a view on things. But I would say that there's no shortcut to knowledge. You have to take the time, you have to read up on it, and as with anything in life, when you put the time, the knowledge comes. And when the knowledge comes, the confidence comes. And when the confidence comes, maybe you are in a position where you can make a very, very large or small, whatever size, investment that you see fit in a way that you feel very, very confident and very, very informed and very, very well aware of all of those risks that come with it. And that's why the guys in the True North crew seem so, I don't want to say apathetic to downward price actions, but kind of are at this point, because a lot of us were Bitcoiners first, So we've ridden that roller coaster, right? Now seeing with strategy, we're just like, this is all part of the game. This is all part of the investment.
Yeah.
So yeah.
I'm not nearly as informed as you are on this, but I do have the same like feeling towards it. I'm like, okay, whatever, it's going down. Like 10 years from now, I'm fine. Like Bitcoin, in my opinion, at this point, it has proven itself, and we're in a situation that's way different now with all the institutions coming in and countries and companies talking about putting it on. So I totally agree with you.
And one key piece is there's 12 different products, and in this like strategy economy. So, I mean, Adrian, this has been awesome. We think for the StockTwits audience, like they're coming from the traditional side, and like they're stepping in, and like we want to get them in front of this whole economy versus like stepping into rug pulls, stepping into like the side of crypto that we're trying to get away from. So I think this has been phenomenal to have you on, and we'd love to have you back soon. Just keep us updated. That Saylor's going to come out with some new advanced convertible bond product, and we're going to have no idea how to evaluate it. So
he might. That's the thing about Saylor. He has an engineering background, and he's really using that. Think outside of the box right now when it comes to all of these different offerings. So that is why he has taken financial engineering to the nth degree. And if we do a quick count just to end, we've got strategy, we've got strike, we've got strife, we've got MSTU, we've got MSTX, we've got MSTY, we've got IMIST. That's what, 7 right there.
Yeah.
Then we've got the if you want to think of another lever to pull, you got the options market that exists for MSTU and MSTY and MSTX. And you got the options market that exists for strategy. That's 10 rungs right there. That it's just this thing is going to scale to a level that people are not ready to appreciate. And I think that in 5 years hence, all of us that were earlier investors will be looking back on this with smiles on our face.
Yeah,
I love it.
Thanks
so much again, Adrian. Everyone for listening. Definitely follow Adrian. Twitter handles should be in the tweet, but. Again, we'll definitely have to have you come back, and such a pleasure having you.
It was my pleasure, actually. I really enjoyed this conversation. I'll be happy to come back.
Yeah, thank you, Adrian.
Thanks.
All right, everyone have a good week.